Hi, everyone. I'm Nick Einhorn, Renaissance Capital's Director of Research, and I'll be talking with our Senior IPO Market Strategist, Matt Kennedy, on the state of the IPO market. So, Matt, what is the state of the IPO market?
Hi, Nick. So, yeah, I think the headline here is that bad companies can't go public and the good companies don't want to go public in a bad market. And so the great IPO drought continues. Now, the IPO market has been abnormally slow for almost 2 years, which is now as long as the period after the great financial crisis. So, just as a quick refresher, IPO activity plummeted at the start of 2022 when the Fed rapidly took us out of that zero rate environment, causing IPO returns to just fall off a cliff. This year, IPO returns and activity have picked up, but we're still not seeing that consistent, meaningful deal flow. It's been one or two large IPOs a week instead of the typical 3 to 5 that we get in a normal market.
So, why is that? In September, there was that trio of big tech IPOs, ARM, Instacart, Klaviyo, and then we had Birkenstock right after. So, where are the IPOs following on from those?
All right, so we did see the start of a pickup in activity this fall, and a couple of months ago, there were probably dozens of large companies sitting on the fence. But right now, though, the great majority have landed firmly on the 2024 side of the fence, which is a good reminder of just how fragile this recovery is.
Can you talk more about that? Why we're not seeing more of a pickup?
Sure. Yeah. So two things. First, market turbulence, much of which is probably skittishness around rates. A few weeks ago, the VIX volatility index hit the highest level since March, and the Renaissance IPO index, something we all track here, and that's also tracked by the IPO ETF. That's up 27% year to date. However, those gains all came in the first half of the year, and were actually slightly negative for the second half. I'll point out that the S&P 500 is also negative for the second half of the year. The second thing that I'll point out is weak returns for 2023 IPOs. As of the last close, only one quarter of sizable 2023 IPOs were trading above their offer price. If you look at the four largest IPOs of the year, that's ARM, Kenvue, Birkenstock, and Instacart, none of those have done particularly well. They actually average a negative 11% return from offer. So with the 2023 class, it does vary case by case, whether it's market related issues, company specific issues, or in many cases aggressive valuations at offer.
Okay, so what will it take to get the IPO market going again?
Time for one thing, but a rate cut wouldn't hurt either. And that's actually why 2024 looks pretty promising. The Fed is expected to cut rates next year, and bankers are often advising their clients to go public in that sort of environment. Looking at the data in the past 35 years or so, we haven't seen an IPO drought drag on for more than 3 years. So that's another thing that kind of points us towards 2024 as being a decent year. Uh, we're also encouraged because of the supply of pre-IPO companies. It's very robust. There are hundreds of pre-IPO unicorns, many of which have been preparing to file publicly for the past 6 months. More companies will want to tap the IPO market to raise capital as well, since right now they can't really count on a very generous private market. And pretty soon they'll probably run through those war chests that they raised in those monster 2020 and 2020 rounds, which will start to push them towards an IPO. I'll mention one last thing. Markets will need to cooperate. A correction can always derail capital markets, and IPOs specifically will need to deliver some gains. In order for a pickup to really take hold and gain momentum, we need to see IPO investors string together a series of wins.
Well, here's hoping. So what's coming up that has the best streak of delivering that? Any IPOs to look for in the near term?
All right, so the rest of November does look pretty quiet, but assuming the US government funds itself, there are several large deals in the pipeline that could price in the first 2 weeks of December. So I'll highlight 9 right now. We saw recent filings from Chinese electric vehicle brand Zeekr, insurance company Fortegra, hospital billing software provider Waystar, home builder Smith Douglas Homes, healthcare real estate owner American Healthcare REIT, energy company BKV, energy and medical helicopter services company PHI Group, specialty pharmacy Guardian Pharmacy, and car sharing platform Turo. That's been on file for a while. We're mainly looking at companies that are already on file, since there's really only 1 week or two to submit an S1 and still price this year. It is possible, though. I'm keeping an eye out for BrightSpring Health, for example. And then, other than that, from our private company watch list, we are seeing news of confidential filings, but the vast majority of that news flow points to 2024.
Great. Is there anything else you think is important to mention now?
Sure. So, well, I guess I'll just make the point that this is a global IPO market slowdown. The US market is not broken, it's just cyclical. So I would call this a once in a decade slowdown, but those they do come around every 10 years or so.
All right. Well, thanks for the market update, Matt.
Thanks. Happy to do it.